Yesterday, the European currency extended gains amid the light macroeconomic calendar and in anticipation of the Jackson Hole Economic Symposium and minutes from the Federal Reserve's latest meeting. Demand for risky assets persists, while the US dollar continues to weaken against both the euro and the British pound. Tuesday's calendar included Eurozone consumer price data for July, which was in line with analyst forecasts. The annual inflation rate in the euro area stood at 2.6%, matching preliminary data. Core inflation, which strips out volatile energy and food prices, held steady at 2.9%, in line with the flash estimate. The statistics supported the euro, allowing it to extend its bullish run. Today, the trend is likely to remain bullish, especially amid the lack of important news releases. Today's macroeconomic calendar features data on UK public sector net borrowing and US crude oil inventories. All eyes will be on minutes from the Fed's recent meeting. Recall that the US central bank left interest rates unchanged but signaled its intention to ease monetary policy at its September meeting. Now the market is wondering how deep the regulator will cut its benchmark interest rate. Perhaps the minutes will help traders get some clues as to what the Fed will do. Still, the key events this week are the Jackson Hole Economic Symposium and Fed Chairman Jerome Powell's speech scheduled for Thursday and Friday. Now let's move on to technical analysis. The 1-hour EUR USD chart shows that the uptrend remains intact. A false breakout at 1.1131 will generate a sell signal, dragging the euro down to 1.1102 as a part of a bearish correction. However, given that market sentiment is bullish, it would be wise to buy the bear from major support levels, continuing on an extended rally. If the price forms a false breakout at 1.1102, a buy signal will be generated. In this case, the euro is likely to bounce back to 1.1131, break above this mark and continue its bullish run to 1.1160 and probably 1.1188. At the level of 1.1188, I recommend going short on the rebound to catch an intraday correction of 25-30 pips. Short positions at 1.1131 and 1.1160 can only be considered after a false breakout, as counter-trend trading is too risky. Alternatively, if the price breaks below 1.1102, the euro may dip to 1.1073 and even 1.1053. These levels can be used to go long on the rebound in anticipation of a 25-30 pip move. As for the British pound, the situation is similar. Traders continue to add to their long positions, increasing the assets changes for further gains. A false breakout at 1.3010 will make it possible to buy the pair, expecting a rise to a new month high of 1.3049. If the price consolidates above this level, the pound-dollar pair will extend gains to 1.3085 or even higher. At the level of 1.3138, traders are advised to go short on the rebound to profit from the 25-30 pip move. Going short at 1.3085 and 3049 will only be relevant on a false breakout. In a bear case scenario, if the price breaks through 1.3010 and test it from the bottom up, traders are expected to lock in their profits, thus pulling sterling down to 1.2974 and probably 2941. At the level of 1.2941, I recommend going long on a rebound, expecting an intraday correction of 25-30 pips. Long positions at 1.2974 can only be considered on a rebound. In this case, however, you can only expect to make 15-20 pips in profit. Best of luck.